On Monday, I was fortunate enough to appear on a Bloomberg charting futures segment, which we will link to on Traders Insight. And the topic of the day was gold. And while I really had the great opportunity to talk about a lot of things regarding the price of gold, obviously because of time constraints and because of the way the questions go, I didn't really get to talk about everything that I'd hoped to. And so here's some of my other thoughts on gold. The theme of the discussion that we had was that gold has certainly been in quite the bearish downtrend, let's say for the past 3-4 months. Gold normally trades roughly inversely with the dollar. But in this case, gold has severely underperformed over the past couple of months in a way that's not explained strictly by dollar strength. And that leads me to believe that while futures traders who love to follow trends, and it's usually a very profitable thing to do, it makes me worried that the trend is getting closer to exhaustion rather than continuation. Or if it does continue, I think the risks of a sharp pullback are certainly manifest. A support level in gold is roughly the 1200 level, and we're kind of approaching that now. So you have to wonder, what's your risk reward? Could we break down below 1200? Probably. Although I think we wouldn't do that in one fell swoop because it seems to be a fairly major support level. On the flip side, the 30-day moving average is up at 1260. So you could really be exposed to quite the sharp pullback if you're short futures or short gold ETFs. So my comment there was you should really be hedging your upside if you've been playing the short side in gold. But the part that I didn't really get to touch on is people ask all the time, why should you be invested in gold? I mentioned yesterday, and I really believe it, that I've always been sort of agnostic about gold. I don't really have a strong view one way or the other about whether it's great or it's horrible. Despite the fact that there are very divided opinions on gold. There are gold bugs who believe that you have to have gold and stress its need in every portfolio, and gold bears who just see it as a shiny yellow metal with no real inherent value over and above what you could use it for as a conductor of electricity. I fall somewhere in between. There's really, if you get wedded to a view of any sort in the market like that, it means you're wrong probably half the time. You're going to miss major moves, and that's really no way to be trading. That's really no way to be investing. Do I see gold as a valuable hedge? If you're watching this in a country that borrows money in another currency, such as you're in an emerging market and the country borrows money in dollars, I would absolutely own gold. I would think if you're watching this in Argentina or Turkey or someplace like that, I would certainly hope that you had gold in your portfolio because it's been a wonderful performer. Because you're not worried about how it performs in U.S. dollar terms, you're worried about how it performs in local currency terms. And in these countries where the dollar has performed, has basically the strength of the dollar has weakened the emerging market currencies, you certainly want to and wish you had some gold. If you're a U.S. investor or in any, let's say, the major G7 countries that really borrow in their own currency and have access to their own printing presses, the case for gold is less certain. It's more of a financial asset. Is it a hedge against inflation? Sometimes. The problem is it's imperfect in all those regards, and so that really makes me think that you need to be treating this just more as any other commodity and not wedded to the position. For example, as a sidelight, one of the most infuriating commercials that I see on TV is some company trying to get people to buy gold in their investment accounts, and they flash to some old codger who's saying that, well, I know every night my gold is working for me. Your gold is not working for you. Your gold is sitting there somewhere doing nothing. That's the problem with gold. It doesn't earn interest. As a matter of fact, depending on how you own it, it can actually cost you money to hold it because it's got to be someplace safe. And it may actually cost you money when you buy and sell if you're holding physical gold because it has to be assayed. So the idea that gold is this wonderful hedge for all seasons, if you're living in a more stable economy, that's a tough one. So going back to it, I would say there's definitely some trades to be made here. There's been some severe underperformance relative to its normal movement against the dollar. And I would say that if you have been trading this from the short side, God bless you. You've probably done very well from the last couple of weeks, but I would think you should be looking for opportunities, whether you use stops, whether you use call options, however you want to hedge that. You may want to start to think about hedging your exposure because certainly it's wonderful to make money. It really hurts to give it back. And so you may want to trade accordingly.